guys. Good morning, good afternoon, evening to everyone, wherever you're joining in from. So for the next half hour, we're going to be stuck with me moderating, Ruby here from Greenhouse Capital. The discussion today on day 2 of the Blockchain Africa conference is going to be focused on crypto investments and blockchain investments from a VC perspective. Alongside a lot of our fabulous panelists here, they're going to dig in with some intros. But we're going to be talking all things crypto, blockchain, and Web3 as it relates to Africa as well. So with that said, I'll kick off with an intro. Ruby here, partner at Greenhouse Capital. We're an early stage investor focused on fintech within the continent and within the Middle East, and by extension have quite an extensive portfolio of about 15 companies in the blockchain and applied crypto space. Let's kick off with intros. I'm going to go around the table and start with Cyrine. Please go ahead.
Thank you. Hi, everyone. So I'm an investment associate at Global Ventures. Global Ventures is a UAE-based VC firm. We invest across the Middle East, Africa, Pakistan, and Turkey. We're sector agnostic, and we primarily invest at Series A stage.
Go ahead, Anil.
Sorry. Didn't hear that. Apologize. Yeah, hi. Anil Hansjee, General Partner at Fabric Ventures based in London. We are a venture firm at the early stages, seed, Series A, predominantly focused explicitly on Web3, open web companies and crypto assets, investing in global winners with people on the ground in Lisbon, Berlin, Luxembourg, and London, backed by institutional founders, crypto asset managers, and the likes, with companies in the portfolio such as Immutable, YGG, Axie, Near, Coinbase, Ledger, Ramp, The Graph, Polkadot, and of course, Chris at Yellow Card.
I guess that's my segue. So I am Chris. I am CEO of Yellow Card. We are one of the largest crypto exchanges on the African continent, and we have some great investors, like some of the great people on this call.
Awesome. I'll go next then, Chris. So my name is Gideon. I'm the managing director of CVVC Africa. We're a Swiss venture capital firm with the plus. And the plus is really our ecosystem business. So CVVC is our investment vehicle. We invest in early stage startups that utilize blockchain, predominantly seed, pre-seed. And then we have CV Labs as well, which is our ecosystem driver. And we'll touch on that during the call, but that's really everything from co-working spaces to events, advisory, reports, etc.
Awesome. So I'm going to start off with an easy question. Obviously, we've seen massive adoption of cryptocurrencies, of blockchain technology, not just in Africa, but globally over the last sort of 2 to 3 years. Accelerated by the pandemic, we see sort of quick stats here, something like 1.2K% in growth in terms of access in Africa, $105 billion market value in last year alone. But a lot of these use cases, especially as it relates to the continent, tend to be sort of centered around remittances, cross-border payments. Any use cases outside of this that you guys are kind of digging into, both as investors, but also as founders, Chris? And what are the biggest areas of opportunity that you guys are excited about? Go ahead, Gideon.
Cool. I think, as you said, international remittance is quite a popular use case. A lot of people have been tackling that. It's extremely expensive to remit capital across the continent. I mean, just to send money to Nigeria, for example, it's more or less 9%. So you can see that use case and how it plays a big role. That being said, I think that use case encompasses a lot of different use cases in the financial sector. And when you think about blockchain, some of the common words that everyone uses, right, is traceability, transparency, trust. And I think that those few terms really marry Africa really, really well, right? I think that's where blockchain can really, really solve some of the issues in Africa. I think that the developed world is focused a lot on the speculative crypto economy. I think Africa is teaching us about the true use cases of blockchain. Financial inclusion, of course, is a really big one. I'll give you a great example of a startup that we invested in Nigeria called Karma Chain. And what they do is they basically aggregate data from service providers like OPay, who have a lot of clients that are unbanked, mobile money providers, etc. And they provide this data to financial lenders, giving unbanked individuals in Africa the opportunity to participate in the market and have a credit score. Digital identity is another one that's massive in Africa at the moment. There's so much more around that as well, and we can chat about NFTs later, I think. But just verifying certificates, verifying vaccines, diplomas, university degrees, and I think combating a lot of the fraud that we see in Africa as well. One more example I'll give you is a startup we invested in, another one actually in Nigeria called House Africa. And there's a lot of property fraud in that region of Africa. And what they do is they put the title deeds of these properties on the blockchain. So there's a lot of different use cases. But I think when you think of Africa, some of the big issues is financial inclusion and fraud. So we're really trying to stay as close to the government as well to be able to kind of explore those use cases.
Awesome. Yeah, it's interesting. We're also seeing, even startup investing starting to move towards tokenized assets via companies like Get Equity and other, especially in terms of being able to provide accessibility on the continent. Cyrine, how about you? I mean, you're obviously coming in from a much larger, later stage lens. I'd love to kind of dig into how you guys think about the opportunity.
Yeah, sure. So the way we look at this is, let's say 2 buckets to make it simple. The first one is the first layer products that are like the first layers between the customer and Web3 products. And these contribute to increasing the adoption of these products. And then these are like the most common use cases: decentralized and centralized exchanges, open banking with DeFi products such as open banking, peer-to-peer transfer, and remittance. And these not only contribute to increase adoption within the continent, but also educate people, which is education is the largest challenge when it comes to adoption. And then you have the second bucket, which is more like second and third layers type of products, such as NFTs and DAOs, so decentralized autonomous organizations. And we've looked at an interesting one within this specific area, which is a Nigerian company that operates in fundraising and venture portfolio management. Basically allows startups, one of their products at least, allows startups to raise capital in a decentralized way, which is a very interesting use case that we looked at. So this is how we look at things for now.
Awesome. And just real quick, Chris, I'd love to get your perspective, and then Anil.
Yeah, I mean, I think when it comes to some of the major use cases, I think you really touched on it. I would say what really gets us excited is just that growth number, right? I think you said 1,200% over the past year, and I would contend that it's a lot larger than that, right? I think that what we're seeing in countries, especially Nigeria and in parts of East and Southern Africa, it's significantly larger in terms of the overall growth, right? And I think that a lot of the market is still informal, and so a lot of it it's still difficult to track just how much it's growing, right? But even with reports like Chainalysis, right, you have 6 of the top 20 countries now in the world for crypto on the continent. And so I think we really haven't seen anything yet, and I think that's what gets us the most excited, is that the space still has so much room to grow. There's still not that many people in the space on the continent. You see some projects popping up now, but obviously nowhere near the rate that you see projects popping up in other parts of the world, right? And so it's that growth, again, whether that number is right or not, that growth is only going to accelerate from here, and you're only going to see more and more companies popping up, and now with access to funding, I think it's we're looking at just really hyper growth on the continent for this industry specifically.
Yeah, agree with everything that's been said before. I mean, I think Gideon hit the nail on the head with Africa showing some of the real use cases of blockchain. But of course, we sit with a global lens, and I do think that even though there's a lot of speculation going on in the Western markets, as you said, Ruby, that some of the true disruption is still to hit us. I have a background from PayPal before I joined Fabric, and I do think about the fundamental payment rails that, even though they're difficult to navigate, as Chris and Gideon know, in Africa, fundamentally they're still discrete in their nature, meaning that, you make a payment and it costs so much and it takes so much time wherever you are in the world. And I think about the rails of blockchain for enabling situations where, I'm in Nigeria, I'm playing a game where the points I earned are streamed to my wallet, or instead of waiting for payday, I can be paid by the second or the hour, or the minute, or if I'm a content creator, I can be paid in real time while my content is actually being consumed. So reimagining what new rails can do opens up so many use cases. And I think that's a global perspective. Of course, it has a huge impact real time in Africa, given, the hurdles that exist in that nature. So that's kind of one of the big opportunities for me. I think the other one in particular that interests me is not just investing, but also educating, because I think we are in a situation now where there's not enough people who really understand blockchain, certainly not on the coding talent side. We need to raise the abstraction level and inclusion level and get more businesses to accept payments, get more engineers to work. I think some of the stuff that Gideon's doing in his accelerator is great for that. We also have an incubator called Fabric X, which is trying to encourage sort of Web 2 people to come into Web 3.
Yeah, it's quite interesting, actually. And I think one of the things that I also wanted to try and spend some time here, especially for the investors on the panel, the space offers some really interesting deal structures where on one end of the spectrum, you have much more traditional equity style deals, right? So investing in projects, generally they tend to be infrastructure, SaaS style businesses. And then on the other side, you have all these network assets that are kind of Bitcoin, Ethereum style businesses and projects, where you're investing directly in that token or that cryptocurrency. But in between, there's such a massive spectrum of deals and offers a combination of equity, token, debt / off balance sheet liquidity. How are you guys pulling all this stuff together? How are you guys analyzing these new deal structures? And how does volatility affect some of the deal structures as well? So maybe we'll start with Gideon and then Anil, and then Cyrine if you want to jump in the end.
Yeah, thanks, Ruby. So at CBVC, we are traditionally a little bit more of a traditional investor in this space. Our niche is blockchain exclusively and Web3. We are predominantly an equity investor. We started getting into tokens recently. In fact, we had an announcement last night of our investment into a DeFi protocol called Float. So traditionally, we are more on the equity side, and we're investing really in like the big bricks and shovels of the technology, and not so much on the token side. But we are getting into it now. I think, of course, there's a lot of upside in that space. The returns have been phenomenal for a lot of VCs in that space. We've just had it now. In fact, from private round to private round, we had a significant return. But then this particular protocol that we invested in decided not to list right now, obviously because of the volatility of the market. So our returns are not liquid at the moment. Although that is one of the appealing parts of these token investments, is there's a lot of liquidity. And then there's these all new mechanisms, right, that have been put in place, a lockup period where you can get 10% of your tokens out, which prevents some of the kind of the firms that are doing these pump and dump schemes. So we're really excited to get more into the token space. Of course, a lot of the time, the gaming or play to earn space is a good example. You're investing in roadmaps, really, with multi-million dollar market caps. But that is the only way at the moment to participate in the market. So you've got to kind of get in on the bubbly space of it. Even though some of the projects are exceptional, it's sometimes difficult to sift between the good and the bad.
Yeah, from our perspective, I find the disruption of blockchain interesting, but it's also the disruption in funding models and funding structures that is equally interesting. And I think Cyrine touched upon the example of DAOs and the investment DAOs that are coming on to market as well, which is the latest phenomenon. But just like even in the equity markets, you could argue that crowdfunding changed the name of the rules of the games. Certainly on the retail end of the spectrum, I think the retail end of the spectrum in crypto is actually where most of the disruption has happened today. I mean, obviously started with ICOs, which was really, even though it was a failure, it was actually a good test failure because people learnt the lesson around what was right and what was wrong. And, that evolved into what you have today, from security token offerings to initial exchange offerings to DEX offerings, MISO, for example, which is minimal initial sushi swap offerings, with lots of programmatic auction models built into the smart contracts that can be automated in a decentralized way, to the NFT offerings that have evolved, which now enable governance, community incentive structures to be built into NFTs for more tight-knit communities who are attached to a collection, for example, but could show their individuality through that NFT. And then to DAOs, which Cyrine has also touched on before. So I think all of these have a role, and predominantly they have been retail, but I think the NFT offerings and the DAO offerings sort of start to, become an institutional, have an institutional angle. But I would say that the most important thing as an institutional investor, which is what we are, is that we need to be able to accommodate owning any one of these different structures. And gone are the days for us as active participants and stakeholders in this market just to sort of apply an equity lens to everything. So we have the ability to manage tokens, manage NFTs, as well as equity. And there are two things to be said about that. Number one is that it's not straightforward at all, and volatility comes into it, but volatility of tokens is not the only thing. Ultimately, you are a stakeholder, and you have to provide value as a stakeholder in a much different way than if you're just owning equity. It's not to say that owning equity you don't. Of course, you're on the board, there's governance, there's lots of things you do, as well as capital, clearly. But as an active stakeholder of tokens, there are many other things that you need to be involved with. Everything from token design, participating in liquidity, governance through DAOs, and to do that, you really have to understand the utility of those tokens, the economy that's built up, the supply and demand side, the sustainability versus the pump and dump potential, which Gideon alluded to, and of course smart contract risk that exists. And so it takes a little different skills. We have economists and we have technical people on our team that allow us to do these kind of things, as well as liquid trading capacity on our team. So we have the equity team, we have the liquid team, and we have technical and economists to enable us to participate as stakeholders in doing this.
There's so much to unpack there. I feel like I've got questions for you now. But I wanted to get Cyrine's lens on, as you're thinking about some of these deal structures, the other part of this is also, what are some of the characteristics that you guys are looking for as you invest? I think, Anil, you touched on a little bit on kind of the community aspect and where being able to analyze the I guess scale and growth of that project. Cyrine, maybe touch on what are some of the challenges you guys have faced while analyzing some of these startups or projects, and also some of the characteristics you're looking for.
Yeah, sure. I would say that the most important criteria, if you'd like, would be the team, and that's the case for all of the investments that we look at, regardless of the sector and geography. So we look at founders who understand the space and also the technicalities of the products that they're building. We know that a lot of cash is being injected, especially in early stage in the Web3 sector. So we're not looking for founders who are jumping into this hype. We're looking for founders who are here to stay. Then the product that really solves like a real pain point, localized to the challenges faced here on the continent. Product that has a long-term viability, not just solving some superficial challenges. And then something super important also, is a product that solves the on-ramp problem of around education. That's the biggest challenge to adoption, and that's something that we really look at when we screen deals within the space. These are, I would say, the most important ones. Of course, there are many others. Yeah, I think that's pretty much it.
Yeah, thank you. So I'm going to flip the deal structuring question slightly back to Chris. I mean, you guys have one of the largest crypto exchanges on the continent today. Can you share a little bit more about your fundraising journey, and also just how you've thought about structuring your raises overall?
Ruby, I think Chris might have predicted. Yeah. I'll maybe follow up on Cyrine's comments, because I think a lot of them are valuable. I think in the VC space, there is never mind the industry. I think there is a lot of common ground when you're looking at different startups and what you look for to invest. For us, it's the people, right? Because we are very, very early stage investor, seed, pre-seed, and incubation. And the biggest thing for us is, as Cyrine said, are they in it for the long term? Do they have 5 side hustles going on, or is this their dream? Is this their passion? What is the founding team's history in the past? Not to say that we wouldn't invest in fresh talent out of university, but we want to really see, are they driven and passionate to turn this into something special? We're looking for the next unicorns or gazelles in Africa. We had a good example I mentioned earlier, this investment into Float Capital, and we actually invested into this business in 2019 called Wildcards, and it was a completely different business model. It wasn't as successful as they would have hoped, but they did a insane pivot into a DeFi protocol, and they just closed a $5 million seed round yesterday, which we were part of as well. But it was the team that really got us to that stage, and we're not, as much as we're looking at the idea, as much as we're looking at the technology. Are they outsourcing the technology? Are they doing it in-house? We were looking at the total addressable market. For us, it's the team. And I know that's sometimes a quick answer to a common venture capital issue, but we're also founders that invest in founders. So that was my experience, our CEO's experience, where he was also a previous founder. So we're not all CAs and CFAs and doing due diligence on these startups based only on the tokenomics model or spreadsheets. We're really looking at the people. I think that's just a really, really big point for us.
Yeah, it's a good point. I think, I think we've maybe even got Chris back now. So it would be great to get your thoughts, Chris. I was just saying that you guys are one of the largest crypto exchanges in Africa. You guys have obviously gone through an extensive fundraising journey locally and globally. Do you want to maybe touch on how you guys are thinking about kind of the deal structuring, how you're thinking about structuring your fundraisers? Are you using kind of the combination of equity and token? Maybe unpack that a little bit for us.
Yeah. I think what's been the most fun about our fundraising journey is that we've been around long enough to go from sort of a iffy upcoming industry that people were not too comfortable with to like the industry. So our seed round took us probably 2 years to put together, because we're going around telling people we're going to sell Bitcoin in Nigeria, raising every possible red flag in traditional VC. And then our Series A came together extremely quickly, right? And so just the the way the industry shifted and the way that people started looking at the industry on the continent shifted quite a bit, especially I would say really in like 2020, 2021, right? With COVID, just the way that people started thinking about it has completely shifted. But from our end, with what we're building, we knew from the beginning that we would need a good amount of capital over time, right? And we're building more of a traditional exchange, right? More of sort of Coinbase than any type of token project. And so till date we've only done equity fundraising, and that's been on purpose, right? We think that especially when we started out on the fundraising journey, that was the best way to set us up for long-term success, right? And to be able to raise money over and over again. I think that some token projects now have started to break that mold. Whereas before you were pretty much stuck in one or the other, right? You either raised tokens or you raised equity. Now we're starting to see companies that are able to do both, right? And I think that there are plenty of examples, especially on the exchange side, right? Everything from Binance down, of companies that have been able to raise equity and then turn around and raise tokens, or vice versa, right? Companies that have been able to raise on tokens and then turn around and raise a formal proper equity round. I would be lying if I said it wasn't always something in the back of our mind, right? The idea of literally printing money, but it's for us, right? It's always come down to sort of what is the business model and how much capital do you think you're going to need long term? Are you going to need constant access to capital? In which case it makes more sense to do equity, right? Or is it something where you can take a large inflow and then be a little bit more dependent on the market? In which case, tokens are great, right? And obviously, if you're building anything in Web3, anything in that space, then tokens are certainly something that you should consider.
Yeah, can I just add that I think it's important, though, to be wary of when you have both, that you make sure that it's very clear where value is accruing and that the investor base are aligned, so that you don't get, because that could spell the end of the company if you've got investors driving value one direction versus the other direction, equity versus token. So it's very difficult to do that and balance that, but designing a good token with a strong utility can add value to the overall company. And if that company then's value generates through equity, that's fine. Or if it purely generates through the token, that's fine. But having some mixture and incentives being misaligned is very dangerous. We do have a couple of examples. Currently a company called Immutable out of Australia is an equity play, but clearly has tokens on their balance sheet, which they use to incentivize behaviors of their product and their games. Or there's a company, Celsius, which is a more traditional yield asset manager that uses a token to incentivize behaviors. And of course, that adds value to the equity holding. But at the moment, at least, value is generated predominantly through the equity holding.
Yeah, super, super interesting. I almost want to jump to another question that kind of came up as you guys were talking. As you start raising both within the continent and as you guys start investing within the region more and more, obviously one of the big topics within this is really around the regulatory red tape and regulatory kind of barriers. Governments across the region traditionally have been relatively cautious, I'd say, about crypto. We've seen major regulators either, take very, very slow steps towards incorporating it, or have put flat sort of bans on allowing kind of retail trading. Any sort of stories, Chris, from your end that you'd like to share about some of these experiences around navigating the reg landscape? And then I'll switch into Cyrine, Anil, and Gideon for, how do you guys think about pricing this into investment and kind of navigating that from a investor lens?
Yeah. So the approach that we've taken, right, is that we like to actually engage with the regulator to the extent that they're willing to engage, right? Which I think some people find to be a bold and interesting approach, right? But to the extent that we can have conversations with regulators in different parts of the continent, we want to do that, right? And we see ourselves in a position to help formalize the industry, right? And so we see that somewhat as our responsibility, and we've had a lot of luck with that in some parts of the continent, and then obviously in other parts of the continent we have not, right? And I think that there are some obvious examples of countries where the regulation is not extremely friendly towards the industry. And then there are examples of parts of the continent where it is, right? And a lot of people don't really even see that, right? And so, from our end, we've taken the approach of we want to be available to the regulator, again, to the extent that they want us available, right? And so what that means is in some countries, we report our numbers, right? In some countries, we're available to answer questions. In other countries, we meet more regularly, right? And we have, we talk about the industry, we talk about the growth of the industry within the country. And then finally, in some countries, we work with the regulator on how does this industry fit into the existing financial regulation? How does it fit into sort of the existing licensing schemes that are in place in the country already? And how do we make that work for crypto, right? And so, as a result, we're the only crypto company anywhere on the continent that's been able to obtain a license. And so we have licensing that allows us to operate in 6 countries. In other countries, we're going through sandboxes. We have formal AML reporting in some places, and for us, it's all trying to take steps towards, again, how do you formalize this industry and take it out of being just a few years ago, basically 100% informal industry, and start to add some of those regulations, right, in a smart way to companies in the space, right? And obviously, it's no secret that Africa has seen more than its fair share of scams in crypto, right? And so regulators are now, I think now more than ever in 2022, they are more open to the space, right? Whereas 2 years ago, a lot of people that we're now talking to did not want to talk, right? They did not want to engage. They wanted nothing to do with the industry. They didn't understand it. They were scared of it. Now, 2 years later, I think people have really come around to the fact that this industry is happening. And crypto is happening in every country on the continent. There's not a single one that you can name that it is not happening in, regardless of what the regulators are saying, regardless of what the laws are there. And, people are starting to come around to that fact, and they're starting to come around to the idea that we can either continue to push back at it and it'll grow bigger in this, informal way, right? Or we can work in some way with the private sector, work in some way with the companies that are working in crypto and want to work in crypto to help protect people from scams, right? To help sort of bring the industry into the light, right? Have things like formal AML reporting, KYC requirements, that kind of thing, right? And so, we've definitely seen a pretty tremendous shift over the past 2 years in terms of the way that some of these countries are thinking about crypto. And so they're not all there yet, right? But obviously the hope is that trend continues.
Yeah, I can't agree more with what you mentioned.
Okay, go ahead.
Sorry. Government definitely see the opportunity, and the pie is growing with regulations in place or not. The pie will be growing potentially even larger without a regulation in place and under the table. It's hard to mitigate this risk when you look at companies within the space, and tough to see what investors can do to actually mitigate this risk. But I think that some important things that we look at when we look at companies within the space is founders who are aware of this challenge or potential challenge that may arise around regulation, especially in some countries on the continent, and also willing to collaborate with the regulators to establish and put something in place, having more that discussion with the regulator versus just building something in silos and working alone to bypass this, let's say.
Yeah, I was gonna add some thoughts. We are a Web3 native fund, but our major LP is actually the European Investment Bank, So we almost have an obligation to be a bridge builder, if you like. And we view our role actually to be participating in that educational push, because I do think education is the key word here, and it's not just in Africa and emerging markets. It's actually in Western markets as well. This year has been a great start. We saw the Biden announcement. They're taking it seriously. We're going to get some regulation in Europe coming up, and it's our chance to influence through lobbying, but the startup community needs to align itself again, around key topics that are relevant. In the US, there's already quite established vocal cords for this, whereas certainly I find in Europe there's less so, and I would only imagine there's even less in Africa. So I do think there's opportunities for communities of startups to come together to speak with one voice about topics. I think in more centralized models that Chris represents, the rules are sort of reasonably well established, although arguably in Africa, they're still evolving, and there's many of them because every country has some different ones. So that makes Chris's challenge somewhat difficult. But largely, I would say anyone who's broadly done any fintech investing in Africa will have some similar types of regulation compliance challenges when they look at investing. I think the real issues are, what's next? So how do you regulate, or should you regulate decentralized models, decentralized finance? How do you manage some of the sort of side impacts of proof of work versus proof of stake, and the kind of compute power and pollution and all that, those type of issues. And taxation is another one. So there's loads of downstream regulatory issues, which the whole world is grappling with now, startups and regulators. But it's our chance to educate and lobby and speak with one voice. And we view that as part of our role. We're very active in doing that through our investments that we make, who I think speak clearly and articulately to regulators such as Chris. And we have another investment in a company called Blockpit in the taxation space, who are active involved in lobbying. And then side to that, we are trying to sort of gather like-minded startups together to try and unify a speaking voice.
Yeah, it sounds like, especially investing in this space is beyond just the capital that you guys are now bringing, right? It's kind of all of the additional, as you said, regulatory guidance and kind of working through how you navigate that space that I'm assuming that a lot of companies that you guys are investing in are going to be looking for. I know that we're about to run out of time. We have a couple more minutes, so I'm going to field some questions out of the audience. I think one of the things that I'm quite curious about as well is we're seeing a lot more dedicated Web3 applied crypto blockchain funds, right? So you have kind of international firms like Jump, like Coinbase Ventures entering the market, like a lot of our panelists here. I guess my question to Anil and Gideon maybe, traditionally a lot of traditional VCs have carved out a Web3 space, but very, very few in the region are actually dedicated to Web3 and applied crypto. Who are some of the players locally, and why do you think this is the case currently?
It's an interesting question. I think it's also a great opportunity for someone like us, like CVVC. I mean, we're a Swiss venture capital firm, but we now have African operations with an exclusive African mandate. We don't know of anyone yet in Africa that is exclusively investing in Web3 and blockchain. So I'd love to know if any of other panelists have heard of any, but exclusive African investments, we haven't heard of any yet. I think that there's still I think a lot of venture capital firms are still wary of regulation, of the space being speculative, specifically in Africa. How we try to combat that is by creating this ecosystem and really just getting all the key players involved. Touching on the previous question, we have a fluid conversation with South African Reserve Bank, for example, with the FSCA. with the regulators here, with corporates as well, with universities. We're really trying to bring everyone together. And I think when a lot of these firms traditionally look at cryptocurrency or blockchain, they think of Bitcoin and cryptocurrency and not the underlying technology. I think that will change significantly quickly. I think there's going to be an exponential growth of funds coming into Africa, of new firms being developed with specifically African mandates. But yeah, to answer the question on our side, I think CVVC is the only one that I'm aware of that's just got an African mandate.
Yeah, I don't know any. I know of someone who's thinking about it, and so they should, right? It's Web3 is a major new platform shift. New funds start in conjunction with these paradigm shifts. We can only think of A16Z in the cloud computing era, right? So I think there's huge opportunities, and I'd like to see more. And I don't think you necessarily have to dive into the deep end of being, crypto native, degen, decentralized, everything. There's plenty of sort of areas where traditional VCs can touch on this world. The kind of business that Chris is in, centralized exchanges, on and off ramp, tax, compliance, custody, the whole financial services or crypto as a service, wallets as a service, B2B solutions, institutional solutions, making crypto more mass market, remittances, as we talked about, cross-border payments, analytics, gaming, and developer tools. These are all areas that work for any VC. You don't have to have tokenized solutions for them.
I think Nestcoin, Yele's new project, my understanding is their mandate is pretty much Web3 focused, right, across the continent. But I think to everybody else's point, that's sort of the first one that's popped up, and I think that there's going to be plenty more, right? I think there's going to be quite a bit coming out of and coming up in that space for Web3 investing on the continent.
All right, final question, because we are a little bit over. Thank you guys so much. Last question is, we've come this far, and I really can't close the discussion without touching on NFTs, which has obviously been a massive topic the last 2 years. Are they here to stay? Are you guys investing in them? Really quick kind of shoot out an answer across everyone on the panel.
I'll maybe mention that really quickly. Sorry, Cyrine, you go ahead.
Oh, go ahead. Thank you. Yeah, I think I believe that they're here to stay, definitely. Not thinking about the nice profile pictures that we see here and there, but more like utility-based projects catered toward problems on the continent. And one, I guess, major one would be around artists, giving them access to a global marketplace where they can sell their art and get recognition for their work. Another interesting one is, I think, a company, I forgot the name, but it's in South Africa. They allow people to use NFTs as a collateral for loans. So that's also a very interesting use case. And I think that we'll see more and more use cases like this, extremely relevant for the challenges here on the continent.
From our side, the one use case that we're quite excited about, it is a bit of a bubbly space, right? I mean, we've seen a rock being sold for over $1 million, but one of the use cases that we're quite excited about for Africa is the verifying and digitizing documents, anything from vaccine certificates to digital identity. I mean, I had a trip to Kenya recently where I had to get my yellow fever vaccine, and I've had this before in the past. Of course, I lost the certificate. I had to get it again. If that was on the blockchain as an NFT, that wouldn't be the case. So I think there's a lot of very specific use cases that are not in the bubbly space that a lot of people are investing in. Although there's some merit in that space too, I think to have a rock sold over $1 million is a little bit bubbly.
Final two, Anil, Chris.
Yeah, I mean, I would echo all of that, and Cyril's point is a very good one. I think, especially on the creative side, if you think about the channels for creators in Africa to really talk directly to their fans and monetize directly. I mean, there's just so much creativity, music, art, etc. in Africa that just doesn't come to light because of the way of the centralized paths that favor head of tail or favor a selection. and so the potential is massive for the continent. Basically, it could also be for a new generation of content creators to directly engage and monetize with their fans and consumers. In a funny way, we said the same thing in the early days of YouTube, that it enabled that. And this is sort of, for me, the next generation of that, where, ultimately, YouTube is then taken out of the power of Google. Sorry about that. But ultimately, the potential is there.
Yeah. I mean, I think we don't do much of anything right now with NFTs. I think that to Anil's point, as more creators on the continent start to get involved in the space, and as you see more content coming up, like native content coming up in the NFT space, I think that would be then something that we would be a little bit more interested in. But yeah, I mean, we haven't seen a ton of demand for, $400,000 pictures of monkeys to date, right? And so probably more interested on the creative side.
Awesome. Well, thank you guys so much. I know we're a little bit over, but anyone who wants to continue the conversation, they can do that via the networking section through the lobby. And also via Twitter and other social media platforms. So thank you guys so much. Panelists, you guys were awesome. And audience, thank you so much for your questions. Hope the rest of the conference goes really well. Cheers, guys.
Thank you,
Thanks,
Ruby.
everybody. Thank you.
Bye.